Hey guys, today is Wednesday, January 25th. I'm looking at a trade setup in eBay for us. We're going to put this on for tomorrow. We're going to do it a little bit different than we've been doing it. But first, let's look at the chart and I'll show you the setup. This is going to be a little more in depth, but I want you to just kind of understand the thesis here. And so, first of all, eBay, it's kind of been trading in this range. We're at the kind of midpoint of the range. You can see we had this nice little leg here. We had a 618 pullback, kind of chopped around, eventually got back up, retested this high, pulled back down, and now we've kind of closed above the high. And one of the things I am liking about this chart is the volume we had after earnings. I didn't follow the earnings, but all I know, or all I really care about, is the market reaction, and the market reaction was positive to earnings. So we've since popped, had a confirmation day above, and now we're kind of, you can kind of view this as some consolidation, potentially to go higher. Maybe we pull back a little bit. You can see that on the down days, the volume is much lighter than the up days. So I think as far as earnings and things are out of the way, or as earnings go, they're out of the way for eBay. So with that, the trade setup I'm looking to do, I'm actually going to base this off of the my other indicator, which I'll show you in a minute. But just to remind you, Fibonacci tells us that if we can get a close above this previous high, that there's a strong chance that we get up to the 27 extension. So that's kind of the move we're looking to get. So we're looking to get up to 32.75 or somewhere near there. And I'm going to show you how this coincides with my average true range that I'm looking at. So if I go over to my other chart, this is the eBay, same chart, daily chart eBay, and you can see that the TTM squeeze indicator was basically, we had these red dots for a long time during this consolidation. Earnings happened and this fired off to the long side. And so now what we're looking for is if we can pull back a little bit closer to these 13-day EMA, exponential moving average, we would buy a call. And we're looking at March calls, and we'll go over those in a second, but we're going to buy a call. If this thing pulls back to here, we're going to buy a call. If it continues to pull back and we get down to this band, this 30-20 level, we're going to buy a second call. And what we're going to do in Thinkorswim is calculate the theoretical price of these calls based on these price levels. And so if tomorrow eBay just simply takes off and without us, then that's exactly what it'll be. We won't get in the trade. If this thing just starts to grind higher, then we will not be in the trade. So what we're looking for is a pullback to somewhere in this area, and then if we pull back and we buy the call here and we get a move to the upper band, then that would be, or possibly even 30.75, that's going to be a really nice trade. Again, like I said, if we, open up flat and rise, then we probably will not get entered in the trade. So let's go over how to calculate this. So first of all, eBay is trading at 31.94. That's where it closed today. The upper band's at 32.52, and over here the pink line in the middle is at 31.36, and then you have the lower band at 30.20. So if we go to the trade table, I'm in Thinkorswim. I'm looking at the March calls. Currently, they're going 33 calls. They're going for 77 cents, right? So what we're going to do is we're going to come over here and go to theoretical price, and we're going to put this for tomorrow. Tomorrow's the 26th, and so what we're looking for is a move back to the mean. So when we go back to the chart, you can see the mean is at 31.36. So we have to calculate, well, 31.94, let me bring up my calculator. 31.94 minus 31.36. So we're looking for a drop of 58 cents in order to buy a call. So if we go back to the trade table, we put in up here minus 0.58 cents, and you can see that actually you can't see it in this because the video, let me move this over just a little bit. There we go. So this is the theoretical price of this column. So right now the call is going for 77 cents. If the stock drops by 58 cents, then the call would be worth 55 cents, right? So what we're going to do is we're going to go ahead and place an order to buy this call, and I'm going to go ahead and bump it up to 60 cents, right? So we're going to place a limit order to buy this call for 60 cents, and I'm going to go ahead and just put this as GTC good till canceled, right? We'll just do one contract for now. And now when I look at the chart, you can see that, and these lines they put in there are pretty, they're pretty close, but they do adjust a little bit. If you leave the price at 60 cents and volatility changes, this line's going to move a little bit. But you get the point. If we drop down to this area, we're going to buy a call, right? So now let's just do a quick calculation of, the theoretical price would be 55 cents if we hit that mean or we get to that level we put in, right? That's if the stock drops by 58 cents. So if we buy that call and then we move back up to the upper band is at 32.52. So let me bring up the calculator again. 32.52 minus, what did we say it was trading at? 31.94, right? So it's 50 cents away from the upper band. So if we hit the mean and we end up going positive for 58 cents, the price of this option now goes to 99 cents. So if we got in at 60 cents and we got to move back to the top, we would make 40 cents. So that's about, 60% gain. And we would probably look at closing or trail stopping or something when we got to the upper band. So the second scenario is if this thing pulls back to the mean and then continues back to the lower band. And at that point, this call would not be good and we would buy another call. So the way we're going to calculate that is this lower band is 30.20. Let's go back to this table. So if I bring up the calculator again, we're currently trading at 31.94 minus 30.20, $1.74. So if the stock drops minus $1.74, the theoretical price of that 33 call would be 27 cents. So instead of buying the 27, if we do get down to the lower band, I would go ahead and buy one closer to the money. So this one, 51 cents. So, and I usually round these up a little bit. So this one I would do 55 cents. So we're going to go ahead and buy the 32 call. We're going to go ahead and place this order. So we're going to buy that call for 0.55 cents. Okay. And this is just one contract. You can go in and you can do as many contracts as you want, but I would do equal contracts on this. So let's look at our chart again. So now, if we pull back into this range, we're going to buy one call. If it continues down to this range, and again, these lines aren't perfect with the price here, but if we get to the bottom of this range, and we would look to buy a second call or set of calls, and then we would look for a move back to the mean or even potentially the upper band, because you can see this thing's kind of trading the range, but I kind of think that we're going to consolidate here and go. So I think we could probably just get one call, but if for some reason this pulls back, we finally get the market pullback we've been talking about, then we'll go ahead and enter this trade. So that's the plan. So you can see that in my, I don't know if you can see it down here. So we have two orders now, and I'll put this in the trade table. So basically, we're going to buy the 33 call here and then buy the 32 call down here. If you have any questions about this trade or anything, let me know. And again, if for some reason eBay just takes off tomorrow and gets to this upper band, we'll kind of just monitor it, but chances are we'll just close the trade and wait for the next setup. And again, if we get one call in here and this thing gets to the upper band, we will close both orders and we'll profit on this one, and we'll just not have it placed on an order on this one. So this position, each position you want to do like a half position or whatever you're comfortable with, because you will have to buy a second one down here. So you want to kind of take that into consideration. The other thing you need to consider is that since these options are so cheap, we're talking 55 cents, there is no stop on this. So, in theory, you're risking 100%. We're not going to try and say, okay, just do a 50% stop. I usually do 50% stops when they're more expensive and in the monies. But for this case, we're buying slightly out of the money, looking for a move to the upside. I think the market is just kind of slowly grinding higher. Let's take a look at the S&P real quick. Let me back out of here just a little bit. So the S&P, we broke down here. We broke above this. I think we got a good chance of getting to the 27 extension. We still kind of have this. Let me make sure I'm drawing this right. Kind of have this move here, and let me just change it. I hate the dotted line. Right. So we had this move, and we were kind of breaking on this today, or the last few days this week, and we finally kind of broke above this. So, there's a chance that we get to 134, or maybe even retest these highs. I think it will probably at least get to, this level. And let me just bring this back over so you can see the prices here. So, I think we do get to this level, which is, let's see what the high was, 134 and change. That's still a couple points away. That's about 10, 12 S&P points, and possibly 134. So if we get 20, 30 more points in the S&P before the pullback, then so be it. We might be able to get in there. So if we open sort of lower, then continue to grind higher, we should probably get entered in on our eBay calls, and then we'll just take it from there. So again, sorry the video is so long. Hopefully this sort of explains what the thesis was. So if you have any questions, let me know, and we'll catch you guys later.